Now, last evening, the board of Fortis Healthcare met and decided that an advisory panel will be set up or has been set up to advise it on the several bids that it has received. Though, of course, I should caveat that the advisory panel will only advise it on the binding bids. Now, this decision of the Fortis board takes off directly from a report published by proxy advisory and corporate governance firm IiAS, which suggested that the board didn't quite have the competence to be able to evaluate all of these offers sufficiently and therefore needed external help. We're joined this morning by Amit, Tandon, the founder and the managing director of IiAS. In a few minutes from now, we'll also be joined by Mohit, Burman, who is a shareholder in Fortis and also one of the two parties that have actually submitted binding bids. But let's get started with you first, Amit. Looks like the board was reading your note, took every piece of advice that you had, decided to set up an advisory committee headed by Deepak Kapoor, which also includes Renuka Ramnath, and the last I heard, Lalit Bhasin as well.
That's right.
Good enough for you?
Well, it's kind of clearly going some part of the way in terms of what we suggested. But before I say that, I think it's good for all of us to kind of caveat these discussions by saying that it's based on information we had till 9:15 a.m. this morning, because the rapidity with which developments are taking place in the company, you don't know what is going to happen by the time our discussion is over this morning. But yeah, coming back, it's kind of slowly getting to where we were. We did ask for an external committee to be appointed to kind of supplement the board. The concern is much more in terms of, it's not so much competence as the fact that the current four-member board has a long association with the brothers, and that was causing with the Singh brothers,
the erstwhile promoters, whose shareholding now is reduced to less than 1%.
That's right, and that was causing some degree of unease, which is apparent in the fact that two of the shareholders have now tried to have the four directors removed and substituted by three other directors. That was my next question to
you. You suggested that a committee look at the evaluating of these bids, right? We now are, I think, faced with 5 bids. Only 2 are binding. This morning, Radiant Healthcare came in with another one. So, why didn't you recommend a whole new board? I mean, this group of shareholders that represents 12% or so has called for an extraordinary general meeting to sack the entire board and replace it with new board members.
Well, we thought at this moment it would be a little bit draconian as a step. We also felt the timeline is not clear. And the third, we were really not sure how would this whole process go about. So would each set of shareholders put in a nominee on the board? All of them will get appointed as independent directors. Plus, let's face it, the company has been trying to has put itself on the block for the last 1 year, and therefore there is some amount of institutional memory. You may not be entirely convinced about the independence of that committee, but nonetheless they do have a sense of who was saying what, who came in, what did they look at, and what were the issues. So we thought there is some degree of value in that.
This is the same board, and there are other members who resigned over the last year or so, that has sat pretty on a large number of transactions that now look fishy enough for the auditor to raise red flags. And
which
these are not small.
Which they have.
Yeah, I know. So this is the same board that sat pretty on all of these transactions. Didn't do anything about it, till, the proverbial XYZ hit the fan. And so why should we believe that this board has the competence to be able to take the right decision?
Look, I don't disagree with what you're saying. My only sense was, given the timelines, given the other process, if you're going to lose 45 days in it, it's going to be standstill, and therefore it was much more in the interest of time that you needed. And I do believe that there is some institutional memory which these people bring to the table, which should not be dismissed, because then you've got a couple of people who come on, a bunch of people who come on the board, none of whom have any association with what has happened in the past, what is going on. And again, we don't know what their agendas might be. So we said that, look, it's best if you bring in a credible advisory committee, which will then be able to guide the board in terms of what is the decision they need to take. And I would say that it would have, in our mind, it did include things like whether they should look at binding bids and non-binding bids as well.
And they've decided to look at only binding bids.
And they've decided to look at only the binding bids. But our view was that that is the decision for the advisory committee to take and not for the board to take. In fact, in a subsequent note which we wrote, on how should Fortis Healthcare confront its Revlon moment, we've kind of said that they need to actually relook at the whole process today and say that given the fact that all bids are kind of completely different in nature, maybe it makes sense to kind of streamline the process to say that all bids come in one manner for one kind of asset and then take it forward from there. It kind of makes things a lot easier for investors. It makes things easier for the board itself.
Yeah, fair enough. Guys, Ira, Neeraj, any questions? I have lots of questions on the deal itself.
Go on.
Okay, fine. Okay. So, I think that my next question was exactly what you alluded to, and which is that these are non-comparable offers.
That's right.
For instance, even just the two binding bids, Manipal's offer is a clear takeover.
That's right.
The Burman's Munjal offer, if I may call it that, is a sort of capital infusion, but not a clear takeover.
That's right.
How are they going to be able to compare apples and oranges and decide what? And let me add here that almost all the valuations are in line.
That's
they all
right.
suggest about 156 rupees a share,
That's right.
except for IiAS, which has suggested about 160 rupees a share.
They're all in the same. They're all in the same. They're all in the same very narrow, very narrow range.
So what is this how is this committee going to compare apples and oranges? What is the goal of this company? Does it want to be sold entirely and have new management, new ownership? Does it just need capital infusion?
Look, these are all very relevant questions, and that is precisely what we were hoping that the advisory committee would do. They should actually call IiAS and
Fosun and now Radiant.
And now Radiant to say that, look, what does it take you to convert this from a binding offer to from a non-binding offer to a binding offer?
But I think that they made clear. Fosun's letter, IiAS' letter said, give us time to do due diligence, 3 weeks. Nobody's been able to do diligence, and let's not forget that diligence is not just important from a regular M&A point of view. It's also important because this company has been red flagged for seriously weird transactions.
And on there, what we've said is that they should put out a vendor due diligence report. So if you find that, look, a data room is going to take a lot of time, you have credible auditors, you've got lawyers there, get them to put out a report, put out all the issues, and circulate that to these 5 bidders. And just given the fact that every morning you open the papers and there's a new bidder who's shown up, maybe there would be another 2 bidders who come up. What we believe is that everyone is sitting a little bit scared. The board is sitting scared, and how many assets do we know that you've had 5 people show up outside the door and say, look, we are interested in buying this asset. So the board is being a little bit scared. They should be out more, they should be on a front foot. They should be much more aggressive. They should be talking to each of them and understanding where they are, what their concerns are, and how can they address it, and then go ahead and address it. And not just them, we find the bidders are also kind of a little bit scared. All of them seem to, there's one price which came on the table and everyone's kind of saying, maybe a rupee more, a rupee 50 paisa more. With 5 bids on the table, clearly this asset is valuable.
Yeah.
And therefore, why should all of them be holding back is not clear to us. One of them needs to, go out, put in an aggressive bid so that it shakes up the whole bidding process.
But the existing shareholder is also not willing to do that, right? I mean, the Burmans and the Munjals, and it's interesting. We were speaking about the due diligence that some of the people want to make, and we'll get in Mohit Burman moments from now.
Yeah.
They are happy making a bid which is slightly higher, if at all, without the process of due diligence. But even they are not going out and making an aggressive bid. In fact, yesterday, Sunilkant Munjal, when he spoke to us after they revised the offer, said that this is something that shareholders will definitely sit pretty with. The board will certainly agree to.
That's what I'm a little bit surprised about. That if there are 5 people already sitting on the table, then why is everyone so nervous at this stage? And that's a question to be asked of all the bidders.
Okay, one of them is joining us this morning, Mohit Burman. The Hero Enterprise Burman family combined has put in a binding bid. This is the second binding bid for Fortis. Yesterday they revised their offer upwards, but it's largely a capital infusion offer and not a takeover offer. And both Mr. Burman and Mr. Munjal in previous interviews with Bloomberg Quint have argued that that's what the company really needs at this point in time, capital infusion, not some kind of complex takeover offer of sorts. But Mr. Burman, thank you very much for joining us on Bloomberg Quint this morning. We've been talking about the variety of governance issues that seem to surround this current, how do I put it, sort of sale of Fortis Healthcare. Don't you think that it would be better if the board ran a slightly more open process that allowed for all parties to do their due diligence as they required and then determine whether they want to put in aggressive takeover bids. Right now you have 2 binding bids, but they're non-comparable. Yours is a capital infusion one, Manipal is a takeover one, and then we have another 3 which are non-binding bids, but all come in at the same price.
See, I believe that if they do that, the business will have a problem surviving, because as the case is at the moment, the business needs money as ASAP, and therefore, if they go through this whole process of having 6 people do due diligence, it could take another 3 to 4 months. And it's not that this asset hasn't been on the block for some time. I mean, TPG and Manipal have been doing due diligence on this asset for the last 12 months. So these bidders who've just come into the fray right now, I mean, what were they doing for the last 1 year?
That's a fair question. The second question I want to ask you is, how much confidence do you have in the existing board? Whilst they have appointed an advisory committee to advise them on what to do, the eventual final decision will be the board's. And some shareholders have raised this issue of lack of confidence in the board and sought an EGM to in fact sack the entire existing board and replace them. Do you have confidence in the board to take the right decision right now?
Well, see, at this point of time, the board is what it is, and as far as we are concerned, they are the board we need to convince and talk to. And the stance they've taken is that the bid should be evaluated by an independent committee, which we are very glad. We are happy to prove our case in front of this committee, and therefore, once the committee decides which is the best bid, we have to go with whatever the board decides finally with which bid they go with.
You raised the point in your first answer that, you know, the process with Manipal has been going on for the last 1 year. In fact, at various points in the last 12 months, IiAS was also said to be interested. You also raised the process that the rest of the bidders have all woken up today, this morning, and knocked on the door of Fortis Healthcare. But that's been the case with you all as well. You could have considered a capital infusion earlier on. You haven't. You've joined the party at this point as well. So how do you, my point is this. Your offer is different.
Yeah.
The Manipal offer is different. You've come in much later. What kind of evaluation of your offer do you expect from this committee? Because it's apple and orange.
No, because 12 months ago the business wasn't on a downhill spiral, and if you look at our offer, it's basically an offer to save the business with capital infusion in the company, and therefore we've decided to go in without doing the due diligence. So therefore the time is spent. I mean, if people want to do due diligence for the last 3 or 4 months or whatever, 1 or 2 months, I mean, that's what I'm saying, that these were assets where strategics could have easily gone and done due diligence if they wished to. At this point of time, the business needs money as soon as possible, and therefore, by allowing 6 people to due diligence will only harm the business and harm the company.
We have, Amit Tandon in the studio here with us, and I'm going to ask him to react to that. A, that due diligence will take too long, so let's not open the door to all these other bidders. That's one. And secondly, probably the price is settled at 156 for everybody, because the party that has done diligence has determined 156 is the right value, which is Manipal. So everybody else is probably riding on their coattails, saying, hey, look, they've checked out what the potential liabilities are. They've said, okay, 156 is the right value. We haven't had the chance to do due diligence. So, maybe you won't really get a bidding war at the end of it all.
Well, I would say that when they first made an offer, it was at a lower value. So who knows after another 3 weeks of this, whether the bid price actually goes up or not. So I would say that, sure, there are issues with regard to timelines, payments due. You don't want, doctors are last persons who want to get embroiled in something like this. And pretty much like IT firms, hospitals more so. Your key assets walk out of the door every evening and come back next morning, and therefore you want those. So what you need is a tightly run process within a controlled timeline. But my sense is that as we've kind of commented on the vendor due diligence document, it's not that you kind kind of have a data room, everyone's going in. It's for the company to kind of lay out, put out, open all its cards on the table and get people to bid on that basis. And that can be accomplished in a fairly tight timeline.
Okay, so you disagree with Mohit that opening this up to all bidders to be able to do some degree of diligence and come back with binding offers is not going to hurt the company in any substantial fashion.
And the other thing we've said is that look, you want to establish the seriousness of the bidders. This asks them to put a fixed amount in an escrow account. Let it be $5 million, $10 million, because we've seen IiAS. They were inside, outside for a long time. And therefore, are they serious? Are they not serious? Are people just using this as an opportunity to kind of buy more time? We don't know. So if they're asked to put in some serious money on the table, it will, or some real money on the table, it will establish the seriousness of their intent at this stage.
Yeah. Mohit, as a shareholder, two questions to you. And that is that, would you not... would your value in this company not appreciate if you allowed for this kind of actual discovery of value through a tightly framed bidding process of sorts? That's one. And secondly, where do you stand on the one proposal by some shareholders to hold an EGM and sack the entire board?
Just before I answer those two questions, I just want to touch on the seriousness of the bidders, which was just mentioned. If you look at all the bids that have come in, ours is the most serious. We're willing to put in 500 crores upfront, which now we've upped the offer to 750. As soon as that can be put into the company within 30 to 40 days, as soon as shareholder approval comes. So there's no more serious contender than us. Now, asking on your first question on whether allowing a due diligence or some sort of kind of process which allows everyone to as in this conversation we've discussed, I don't believe that the value of this business will go up substantially if you have 5 bidders complete a due diligence over the next 2 months. I think if anything, it will probably diminish due to the fact that as it is, it's against the wall at the moment, and payments aren't being made. So I don't see a huge price discovery. It's a publicly listed asset. A lot of the information is already in the public domain. A lot of the bidders have already looked at this in some way or fashion. So if the shareholders think that by allowing 5 people to do a due diligence in 3 months' time that people are going to revise bids to a much higher extent, I doubt it. On your second question about the EGM on the board, as I said, it was it came up to the public notice yesterday, and until now we have been dealing with this specific board, and as far as we're concerned, we have to keep on dealing with this one until the EGM happens and they are replaced. In that case, we will obviously keep on. We will start, well, I wouldn't say start the process again, but we will reiterate our seriousness to the new board at that point of time then.
Okay, to me, and this is a question to both of you, just to summarize this at the end. To me, the fundamental question that will be facing the committee and therefore the board is, should we open it up and expect there will be better value discovery? Should we open it up and more worms will emerge from the can and there will not be better value discovery, or there might be a deterioration in the business itself, as Mohit has pointed out, as a result of which you probably won't see better value discovery? Should we just go with the 2 bids we have right now? Should we look at capital infusion, or should we look at a full takeover? It looks like a fairly complex thing even for this advisory committee of experts to be able to determine at this point in time. Eventually it will go to shareholders to decide?
I don't think shareholders need to see one proposal. Otherwise, they are not, if a committee is unable to decide it, how do you expect shareholders with much less information to be able to take a view in a shorter period of time? So my view is that it's for the committee to make a recommendation. And look, let's face it, people compare apples with oranges all the time. Best example being rating agencies, that how safe is it to lend to a bank versus putting investment in a RMBS transaction transaction versus in a auto company. So therefore, they have to deal with that complexity at this moment. But and of course, they will need to take into account the fact that look, all the bids have different timelines associated with it, because if you go for the restructuring which Manipal has proposed, it will take about 8 to 12 months before it goes through. What the Burman Munjal combine has said is it's kind of money pretty much on tap. Which is available. The others might do some due diligence and put in the money. Some of it may not go into the company, but the fact that you have a credible promoter means that banks are going to kind of start writing checks. So they are pretty different bids which have come up. But it's actually also raising a very interesting question, which is in the US it kind of got established as the Revlon rule that, what is the responsibility of the board? Is it very narrowly going to be defined as getting the maximum value? Or is it going to be that in their wisdom, they balance the maximum value with what is in the long-term interest of the company? And that would include not just the shareholders, but also the employees and the doctors who are working there.
And that is the Companies Act, you know that very well. Their job, fiduciary duty, is to look at all stakeholders.
But I think
not just shareholders.
I know, but I think it needs to be spelled out a little bit more clearly, and maybe this is something which establishes it, because we need to remember that most of, at least if you again look at the US where most of these instances are, 95% of the cases in M&A transaction are filed by shareholders against the board of a selling company and not of a buying company.
Okay.
And maybe this is this could be something which kind of tips things in India, because you've got two global investors who are fairly vocal about their views on a lot of what is happening here. Okay. And their reference point is the US and not India.
Okay, one quick last question to you, Mohit. It's a two-part question. One, if you were not a bidder at this point in time of sorts, which of the other offers would you vote for?
Well, before I just answer that question, I just want to touch on the last one where you said that eventually, we were talking about the shareholders. Eventually, the shareholders will decide. I mean, the committee will only make a recommendation, which the board will put to the shareholders. But eventually, any recommendation that goes to the shareholders, as you know, will need 75% resolution. So at the end of the day, they are deciding. They're just going against.
No, sorry. What I meant was, will they get to choose? Will they get to choose actively between offers, or will they just be presented one offer and get to vote against or for it? But that said, which bidder would you go for?
Historically, if you put two offers to the shareholders, neither one gains. It's always easier for shareholders to decline one offer and then go with the other. Otherwise, there's bound to be a split vote, and it doesn't lead to either party getting any winning or one losing. However, your question on which bid I would go for, I mean, I think that's quite a biased question, because at the end of the day, the committee and the board has to look at all the stakeholders, as mentioned, and not only on the valuation of a future potential valuation.
Mohit,
if you put five people to do due diligence. Does the business need the money now?
Fortis or Radiant? Which one?
Well, if I had a choice, I would have to. If I was a shareholder, I would have to go with what's on the table now, and not some future possibility.
All right, we'll leave it there. Thank you very much for joining us this morning. Mohit Burman there and Amit Tandon in studio. Thanks for your time. And with that, we're going to have to wrap up.